Everyone, and welcome to today's Explainer. So, we're going to unpack a truly fascinating dynamic that's unfolding right now in the financial world. I mean, if you're reading the headlines lately, you are probably constantly hearing about global market noise, right? International turbulence, economic uncertainty. Honestly, it can feel a little overwhelming. But the latest data from the Association of Mutual Funds in India, or AMFI, tells a totally different story on the ground. Indian retail investors are literally just ignoring the market noise. They are driving equity inflows and SIP books to absolutely stellar highs, and you know what? It is completely reshaping the financial landscape.
All right, let's just jump right in with a number that's frankly gonna blow your mind. 31,781 crore rupees. And no, that is not an annual figure. That is a monthly systematic investment plan, or SIP, contribution figure. It's a record-breaking, all-time high. It's just everyday people putting away a portion of their income month after month, collectively building this absolute mountain of capital.
So that brings us to the core question for today's Explainer. How exactly is this retail liquidity defying market volatility? It's kind of like a modern David versus Goliath story. You've got everyday retail investors armed with steady, disciplined monthly investments stepping into the ring against the Goliath of massive, unpredictable global market turbulence. And spoiler alert, David is holding his ground remarkably well. So here is our roadmap for today. First, we'll look at the retail revolution, then the equity inflows breakdown, third, how hybrids and gold shine, fourth, corporate debt outflows, and finally, we'll talk about the ultimate market cushion.
Okay, starting with Section 1. The retail revolution.
Now, to really grasp this revolution, we have to look at the sheer scale of the retail impact. The total industry assets under management, basically the total market value of all the investments being handled, now stands at a whopping 82.22 lakh crore rupees. Let that sink in for a second. This milestone proves that retail liquidity is no longer just a drop in the ocean, guys. It is the ocean. The collective power of the retail investor is now this ultimate market cushion, just absorbing shocks that, historically, would have sent the markets into an absolute tailspin.
Moving right along to Section 2, Equity Inflows Breakdown.
So, you might be wondering, where is all this capital actually going? Well, straight into equities. We actually saw a massive 26.5% month-on-month surge in net equity inflows. To put that into perspective, that percentage translates to 28,973 crore rupees flowing directly into the equity markets in just a single month. So despite elevated valuations, the retail appetite is clearly only growing stronger.
And if we break down that 28,000 plus crore, you can see retail money is aggressively chasing high growth. Mid-cap funds led the pack, pulling in 6,090 crore rupees. That was closely followed by small-cap funds at 5,601 crore and flexi-caps capturing 5,231 crore. Investors aren't just playing it completely safe here, they have a distinct, clear preference for the higher risk, higher reward potential that you find in the mid and small-cap segments.
Which brings us to Section 3, Hybrids and Gold Shine.
But, this story isn't purely about aggressively chasing equities. The modern retail investor is also pretty smartly hedging their bets. Hybrid funds actually attracted a very robust 12,892 crore rupees. This massive influx was led by arbitrage and multi-asset funds. Essentially, these are funds that spread the money out across different types of investments just to balance the risk. So, yeah, they want growth for sure, but they also want an anchor of stability.
And then, well, we have gold. Indians loving gold is a tale as old as time, right? But even by our standards, a 570% inflow explosion into gold ETFs is just staggering. That is 3,443 crore rupees in a single month. It's this really fascinating dual strategy. They're pressing the accelerator on equities while keeping one foot firmly hovering over the brake with the ultimate safe haven asset.
Let's look at Section 4, Corporate Debt Outflows. To really fully appreciate this retail power, we need to contrast it with corporate behavior. On one side, you have retail investors relentlessly pouring money in via SIPs, but on the other side, corporates actually pulled a massive 109,053 crore rupees out from fixed-income liquid schemes. Now, to be fair, this corporate drain was totally expected. They're just pulling cash to cover their quarterly advance tax payments. But seeing these two behaviors side by side, it really proves how absolutely vital retail money is for keeping the market afloat when the corporate giants temporarily step back. And finally, Section 5, the ultimate market cushion. So here's the big picture to take away from all this. The broader market is currently facing elevated valuations. Things are expensive. But we have this relentless 31,000 plus crore monthly SIP habit stepping up to meet it. This incredibly disciplined domestic liquidity is acting as an unshakable counterweight to any global market noise. It is the ultimate market cushion, and it's being built, just a few thousand rupees at a time by millions of individual investors.
Which leaves us with this final, honestly incredibly exciting question to ponder. If domestic SIPs are powerful enough to cushion the market against today's global volatility and massive corporate outflows, what on earth happens when the global markets actually stabilize? I mean, the future power of the Indian retail investor is going to be something truly extraordinary to watch. Thank you so much for joining me on this explainer, and I really hope this data gives you a whole new perspective on the true drivers of today's market.